Greetings traders, Zach here from the Trading Network. Hope you guys are doing well. This video is, you guessed it, another video from the community request playlist. This video is going to be about a market profile strategy or technique or theory called gap and go, or the gap and go theory. So what this is pretty simple, but it presents a lot of confusion to people, especially people new to the profile. So it is time to break it on down. So we're going to be looking at basically these three profiles right here, okay? Now, most specifically, the gap that we are referring to in the gap and go is the gap between, in the case of an upside gap, the gap between the prior New York sessions high, which is right here at 12,343, and the new session's opening price, and in this case, the low of the day. So what we'll get to and we'll show is we actually never came back down to close the gap. So opening with a gap is basically opening either above the prior session's high, or, and that's the New York session, right? Because this is the overnight, and we technically are opening, of course, within this overnight session. So we want to make sure that we are paying attention to the New York sessions or the regular trading hours session profiles, okay? So we have a gap between 12,343 and 12,402. We opened right here, okay? So we basically opened like right around the low of the day at 12.4, and we never moved back down to close the gap. So when you see that we are looking to open above the prior regular trading hours sessions high, then automatically say, okay, two most likely scenarios are we open and we likely, immediately keep ripping in the direction of the gap, which this would be to the upside, right? Or we open and we reject, for instance, this overnight high, and then we move down and we close the gap, right, at 12,343. So one way that you can see how momentum is shifted quickly off the bat is by looking at the profile structure. And I will be releasing an entire market profile course, which will go over gap and go theory in much greater detail, as well as how to read these profile opening structures. But this structure is called an open test drive, okay? And what an open test drive is when the market opens up, and you can see we have O period, we move down, we test a prior level, or we just move down to probe to see if there are any sellers below a certain level, and then we drive in one direction. And in this case, we drove to the upside. And we actually never even came back down below this low to close the gap. This is B period is the first 30 minutes of the session. So we stayed basically above 12.5 for the entire session in this example, okay? So just to reiterate here, we have a gap because we are opening, call it 60-ish points above prior high, and we have an open test drive profile type, which indicates very high directional conviction. Again, I will get into this in the market profile course a lot more in detail, but essentially there is a meter of probability or a meter of directional conviction or conviction in general, right? There are certain profile types that have little to no directional conviction that tell us that the market is more likely to range or that there is no control on one side, buyers or sellers. And there are open types like the open test drive, however, which show us that there is significant directional conviction upon the open. And in this, when you see that we open, we move down, and then we immediately move up with strength, that shows that buyers are still present. That the buyers that were in the overnight session in this example are still here, or there are new buyers in the new New York trading session or the new regular trading hours session to continue to propel price upwards. So this is the gap and go to the upside. Now, I think that this is a pretty sufficient example for now, unless I can quickly find a downside gap, which I don't think I have pulled up. So with this, if you guys have watched my how to set up the market profile video, if you have the same setup, you can just load more days and go back and find a situation where, for instance, we opened like right here, right here below the low of yesterday's session. So then you would say, okay, well, we're likely to either close the gap, and then I watch reaction at 11.9 to see if maybe there's a short opportunity there, or if we move back above 11.9 and we start putting in higher lows, maybe I look for longs there, things of that nature. So this would be, a gap and go to the downside. Make sure that you're paying attention in regards to the gaps with regular trading hour sessions only, because that is where this strategy holds the most weight. That's where you will see it work the best, and it's a beautiful thing, to say the least. So let me know if you guys have any questions about this. Again, if you want a lot more detail, I would really suggest the market profile course, which will be coming out very, very soon. So keep an eye out for that. Otherwise, just feel free to drop some questions in the comments below. I will answer them best I can. And I hope that this brings you guys value and you can use it in your trading on a daily basis. It's a really high probability trade scenario. You can get awesome trade opportunity, whether we have a gap and go or whether we have a gap and close, I suppose you could say. So thank you guys very much for taking the time to watch. I very much appreciate it, and I will see you very soon.